Do you know someone that has put in 5, 10, maybe even 15 offers on different properties and still not been able to purchase a house? The American dream is said to be owning a house and having a couple of kids and having them play in the front yard and all the things that go with it. But are we being priced out of the American dream? I'm Marcie Billen, and I'm a real estate agent in Oklahoma, specifically the Oklahoma City Metro. So the news, if you read it or watch it, has been full of things like interest rates are climbing and inflation is out of control. Basically news of an impending crash. Well, the news really loves to be dramatic. We all know that. So is there any truth in it? Is there any truth in saying that the American dream is dead? My opinion may not mean much to you, but let's talk about it. So interest rates are the #1 indicator of affordability in any housing market, not just in Oklahoma. So if we had interest rates at 3.1% in December of 2021, and right now we're seeing interest rates at the end of April 2022 over 5%. What does that mean for your purchasing power? Well, it doesn't mean much in terms of down payment, right? Like down payment's down payment, but the interest rate is a big deal. This is what's going to determine your monthly payment. So if you bought a house, closed on one in December at 3.1%, putting 10% down along with private mortgage insurance, your monthly payment is going to be $1,541. Now that's a guesstimate and it's something I did with a calculator, so it may not be exactly that, but you get my point. So then if we're looking at the end of April 2022, when interest rates have risen over 5%, if you had a loan at that point of over 5%, then the monthly payment at $300,000 with 10% down that you would be looking at is over $1,800 a month. And that's with private mortgage insurance. So as this article by CoreLogic states, the Fed is raising the interest rates to try to cool off the rising house prices in the market. But who is this affecting the most? What happened here? Why did rates go up so quickly? The Fed also raised the rate to combat inflation. Now, they're correlating interest rates and inflation, and I'm sure we have lots of economic geniuses out there. I'm not gonna try to explain to you the correlation. I'm not completely convinced that inflation and interest rates should be correlated in the way that they are, but that is my opinion and I'd love to hear yours, so drop that in the comments. But realistically, the rates that we were seeing last year in 2021, sometimes in the 2s and of course in the low 3s, so 2 to 3%, these are not sustainable. It was great. It was great if you purchased at that price, but these are not sustainable for our economy or the banks that are charging this. Those low interest rates were pushing home prices higher and higher. And honestly, it's still happening because we have such a demand and such a huge buyer pool looking at all of these houses. It takes a while for the real estate market to catch up when there's an adjustment in the economy. So is it fair? Who is affected by these rates? Well, we're seeing first-time homebuyers really be affected by these rates, these high, mid-5s, low-5s, depending on what you're looking at or what type of loan you're getting. So disproportionately, these interest rates are going to affect first-time homebuyers, which just so happen to mostly be millennials at this point. Starting a family you start a family now at around the age of 32. So it's a lot older than Gen X or baby boomers were starting families. So now the young millennials and middle-aged ones and the older ones are all trying to buy houses, whether to move up or buy their first home. And we all know that millennials have some extra costs, typically that is associated with their lifestyles, student loan debt being one of those. And millennials are the largest generation since the baby boomers. So there are a ton of us. I'm a millennial and there are a lot of us. Millennials are in desperate need of affordable housing. Unfortunately, these rates are really affecting millennials. So what I saw as a realtor in Oklahoma in early 2022 is that people are coming into bidding wars that we're seeing on listings with a lot of cash, either completely cash, like buying a house completely for cash, or a large down payment on a loan, or they have the cash to make up an appraisal gap whenever they buy the house, meaning they're paying over the appraisal amount. Not in every case, but in a lot of them. Having this much cash with a young family, or not even with a young family, just by yourself or with your significant other, is really difficult to come up with for someone in their early 30s. So many fingers are pointed at inflation for this current affordability housing crisis. And like I said, I'm not going to explain to you the correlation between interest rates and inflation because I'm sure you have your own opinions and I definitely have mine. But I can tell you right now where big corporations are putting their money to combat inflation, and that is in real estate. So some of you may have caught the 60-minute special that aired at the end of March of 2022, where they were interviewing someone from a big corporation who's been buying a lot of houses, and then of course, first-time home buyers and some realtors. So what we're seeing in the market, not for every single house, but we're seeing a lot of corporations coming in to outbid home buyers, owner occupants who are wanting to live in the house. So these corporations will come in with large amounts of cash to buy the house completely with cash and not have a loan. And that just feels a lot better to a lot of home sellers. Those corporations then turn around and rent that house out to the same homeowners the same prospective homeowners who are wanting to purchase it to live in. So now we have even more renters in our market than we did before. So we have people in Oklahoma that are advocating against these practices of these corporations coming into our neighborhoods and purchasing houses and putting renters in there. So a lot of people are advocating against these practices. One of these people is a state representative here in Oklahoma named Mickey Dollins. So Dollins argues that we have out-of-state investors coming in, driving up rental prices and of course prices just to buy the home in the first place. Dollins is running for state representative again in his district and hasn't really come out, and I don't think that he's got anyone running against him, but hasn't come out saying what his platform is going to be that's going to help the situation with out-of-state corporations purchasing houses. He has called out the Oklahoma State Department of Tourism for their consistent marketing to West Coast Americans, trying to get them to move to Oklahoma. And we love for those people to come to Oklahoma. I have many of you that I've helped move from California, Washington State, Oregon, Arizona that want to move out here to Oklahoma. And we love those types of owner occupants. And if you want to live here, what's really difficult is seeing these big corporations coming in and purchasing houses within our own neighborhoods so that they can make that money and then take that money out of our state. So in my mind, there has to be a larger plan. And I love that people in our state government are thinking about this. We need to keep Oklahoma in the hands of Oklahomans, or in the hands of people who are active in their communities, living there, working there, spending their money there. One thing Dollins did mention in his recent interview with Oklahoma Free Press is some of his ideas, or some ideas that other people have come up with, to limit out-of-state investment from corporations. And this includes tax structures. I've seen people talking to their HOAs about changing, only owner occupants can live here, or people that are investors, can live here for a little bit if they, want to, and then rent the house out later. There's lots of different things that we can do at the local and state level to kind of prohibit this practice. Disincentivizing these corporations from purchasing in our states, in our communities, by raising taxes or whatever, is something that they're looking at the state level in order to bring this kind of investment down. And I really agree with all of this. Even though I'm a realtor, even though I have had people sell to large corporations. Most of the time I see people who are selling their own home and they don't want to sell to a large corporation. And that's something you can do on the seller level. You can ask questions about who's purchasing the house. That is up to you as the seller. You can do that. You can ask questions about whether they're going to be an owner occupant or they're going to be an investor. Don't ask any other questions. That's all you can ask. Other ideas I've heard about too are taxing people who own single family homes that are leaving them vacant for more than 6 months or a year. This would include large banks who are letting foreclosed properties sit sometimes for years on end before they put them back on the market. So what do you think? What do you think we need to do at a state level in order to limit some of this out-of-state incorporation investors from taking our homes and pricing us out of our own real estate market? Let me know in the comments. Do you need more information about Oklahoma? well, you may want to watch this video next or take a look at this video. They might be helpful.